Everyone. I'm driving the 2010 Honda Odyssey today with 229,000 miles on it because one of our other cars is in the shop. So my wife's driving my Tesla and I am driving the family van. But let's talk about adjusting your position size so you can handle any amount of volatility. So with any asset, there is volatility. And with that volatility, the amount of that asset that you own for most people determines how much of that volatility they can handle. So what do I mean by that? So sometimes I talk to Bitcoin people about Bitcoin and they're like, it's too volatile for me. Okay, but let's think about that. Is it too volatile for you? Is it too volatile for you to have $1 of your net worth in Bitcoin? The answer is no. Everybody in the developed world can handle volatility on $1 worth of Bitcoin. Everyone. It can drop by 50% and you've only lost 50 cents. It can go up by double and you've gone from $1 to $2. Everybody can handle that. So anybody that says that Bitcoin's too volatile for them, that's not what they actually mean. What they mean is Bitcoin is too volatile for them to own a huge amount of it. Well, great. Then own less than a huge amount of it. So if you can handle the volatility of $1 of Bitcoin going up and down, then that means it's not too volatile for you. Then the question is, well, how much more Bitcoin than $1 of Bitcoin should you own that you can handle? Maybe it's $50. Maybe it's $500. Maybe it's $5,000. Maybe it's $50,000. Maybe it's $500,000. It could be anything. It depends on your net worth. So in my case, I slowly ramped up my ownership of Bitcoin to ultimately 100% of my liquid assets. But I did that over 8 years. Over 8 years, I became more and more comfortable with Bitcoin as an asset class. I got more and more comfortable riding the ups and downs. I read books like Vijay Boyapati's book, The Bullish Case for Bitcoin. Again, I highly recommend that book. You'll feel much better about the ups and downs of Bitcoin if you read Vijay Boyapati's book, The Bullish Case for Bitcoin, Bullish, The Bullish Case for Bitcoin, which is on audible.com. It's on amazon.com. Wherever you read, it's there for you. So I highly recommend you read that book. But again, if you're looking at the price of Bitcoin, and I've done quite a few videos, or multiple, I should say, multiple videos this week where I've said, look, I think there's a more than 70% chance that we'll get a big parabolic rise in the next 6 to 12 months, and a less than 30% chance that we'll see a significant price correction of greater than 30%. So the odds are in your favor, but can you handle that? And if the answer is no, you can't handle 30, 40, 50% price correction, even though I think, the bigger numbers on there are less likely the bigger you go. But if you can't handle that, the easy solution is great. Adjust your position size. Own the amount of Bitcoin that lets you ride out anything. So for me, again, I'm comfortable riding the volatility with 100% of my liquid assets, but very few people are in that boat. The vast majority of people are in the boat where they're comfortable riding with a significantly smaller amount of their liquid assets, or they're comfortable riding that volatility with a retirement account that they're not planning on using for many years into the future, or they're riding that volatility with assets that they have earmarked for sort of higher risk, higher reward sort of investments. In my case, again, I'm at 100% with everything. That means 100% of my retirement funds. That means 100% of my emergency reserves. That means 100% of my savings. 100% of everything's in Bitcoin. Other than Rachel manages some of our assets that are not in Bitcoin, but I don't have any legal right to those assets, and no legal, like, those are her assets to manage, and that way we don't go starving if somehow I mess everything up. But anyway, so I'm at 100%, but that also means I know I can handle the volatility with 100% because I've been in Bitcoin for 8 years. I know what it's like. I lived through the bear market, which means down market. I lived through the bear market after 2017. I lived through the bear market after 2021. I know what those feel like. I know I can take it. I know that Bitcoin always recovers. I can handle it. I know I can handle it. And because I know I can handle it, I can handle having 100% of my assets in Bitcoin. But a lot of people are not in that case. You know, the amount of money that they can handle a 30%, 40%, 50% price drop is just a lot less than 100% of their assets. So as you think about the future, just think, what can I handle? How much of this roller coaster can I really take? And it's the equivalent of this. Like, what if you're getting on a roller coaster and you ask the person who's in charge, like, hey, am I going to end up with my assets way higher at the end of this roller coaster than where I started? And their answer is, oh yeah, this is a great roller coaster. Everybody loves it. Love it at the end. But here's the caveat to this roller coaster. However high you go, you have to drop 50% of that, right? So they're like, okay, how high do you want to go? If the roller coaster goes up 20 feet, it's going to drop 10 feet before it gets to the end at 30 feet. If, or let's say it gets to the end at 40 feet. So if you go up 20 feet, you're going to drop 10 feet and you'll end up at 40 feet up. Well, that's some great returns, but it means you got to drop 10 feet. If somebody inevitably on the roller coaster is like, I want to go up 1,000 feet. It's like, really, do you? Can you really handle a 500-foot continuous drop? You might throw up your Bitcoin. And a lot of people think they can handle volatility that they can't. And so they throw up their Bitcoin. And a good way of thinking about it is like a roller coaster. It's like if you go up 1,000 feet, and then you drop 500 feet, and then you go to 4,000 feet. Well, you're way up. You're way, way, way up at the end. The question is, did you throw up your Bitcoin on the way? Because if you couldn't handle that downstroke, and you chickened out and you sold your Bitcoin when it was down, or you got forced to sell your Bitcoin when it was down because you were desperate for liquidity, you had a household repair or a vehicle problem, or you needed a new roof on your house, or there's like a million different things, and you had no other place to get capital, you might get forced to throw up your Bitcoin. Even if you don't want to, even if you're at the 500-foot drop of the roller coaster, you're like, my stomach's rock solid and I'm loving every minute of it. But if you have a major, need for capital, that forces you to liquidate Bitcoin when it's down because you have no other source of, no other way of getting capital in an emergency, then you might throw up your Bitcoin. Even if your stomach can handle it, your finances may not be able to. So as you think about the future of Bitcoin, make sure your stomach can handle it, meaning you're not going to chicken out and sell when it's down. And make sure that your finances can handle it and you're not going to be forced to sell Bitcoin in a price dip. Now, again, I think there's a greater than 70% chance that we're going to get a big price rise before that dip, but there's a less than 30% chance that we get that dip and before a huge price rise. And just make sure you can handle that. So the good way to think about it is like a roller coaster that ends up way higher than where it started. Everybody wants to be at the end of that roller coaster. The question is, are you going to throw up your Bitcoin on that roller coaster before you get to the top at the end? And if the answer is you might, then you might want to sort of flatten that roller coaster for yourself out a little bit by adjusting your position size. Meaning, look at how much Bitcoin you own, look at how much of everything else you own, and say, can I handle the volatility with this amount of Bitcoin ownership? Or am I going to throw up my Bitcoin? If you think you may throw up your Bitcoin, then adjust your position size. To that until you have the amount of Bitcoin that you feel good about that you can ride basically anything. If you own an amount of Bitcoin that you can ride basically anything, then you're good. If your finances are not going to force you to throw up your Bitcoin, and your stomach is not going to force you to throw up your Bitcoin because it starts dropping and you just can't take it and you end up selling it when it's down, then adjust your position size. Another consideration is, what is your cost basis? Your cost basis is how much you bought your Bitcoin for. Typically, the stomach people have is heavily dependent on their cost basis. So if you bought Bitcoin and your cost basis, which means the average price of all of the Bitcoin you bought, it's the same for other assets. If you buy, Amazon or Apple or Tesla stock at all different prices, your cost basis is how much total did you buy divided by, how many total shares did you buy? So it's basically the blended combined price of all the assets you own. So same with Bitcoin. If you bought Bitcoin at a bunch of different prices, the question is, yeah, but what was the average price of the Bitcoin you bought, taking into account the fact that if you bought more of it at a higher price and less of it at a lower price, the average price is going to be closer to the higher price because you bought more at the higher price than less at the lower price. So anyway, I won't run the math, but and if you're not sure what your cost basis is, shove it into Chat GPT, and Chat GPT will tell you what your cost basis is. Just tell it, I bought this much Bitcoin at this, and I bought this much Bitcoin at that, and you just put it all in Chat GPT and ask it what your cost basis is, and it will tell you what your cost basis is. But depending on your cost basis, the lower your cost basis is, typically the stronger your stomach. Because if we're sitting up here at $106,000 Bitcoin, and your cost basis is down at 60,000 or $70,000 a Bitcoin, you can typically handle a lot of volatility because, Bitcoin drops from 106 down to 85 and you're like, what? I'm still up. So typically the more you are up, the more you can handle the volatility because you feel like, well, I'm still up. I may not be up as much, but I'm still up. So typically the lower your cost basis, the more you can handle your volatility. The problem comes with a parabolic rise. So let's say we run from 106,000 per coin, we run up to $180,000 per coin. Well, what's going to happen is as the pace of Bitcoin's price acceleration accelerates in a parabolic rise, which a parabolic rise means it goes up and then it goes up faster and then it goes up faster and then it goes up faster, which typically happens about every 4 years. In a parabolic rise, what happens is fear of missing out kicks in, FOMO, and people end up buying more and more and more Bitcoin as the price accelerates. They buy more and more and more Bitcoin as it's accelerating. And what that means is they end up with a cost basis of, as it runs up to 180,000 a coin, they end up with a cost basis of 160,000 or $170,000 per coin. Well, what happens is then when the price drops from 180 down to 120, the people up there with a cost basis of 160 or 170, they lose their Bitcoin. They can't take it. They see that Bitcoin they bought at 160 or $170,000 a coin is dropping to 140 and then 130 and then 120, and typically they just throw up their Bitcoin. They can't handle it, and so Bitcoin they bought at 170, they're selling at 130. And then the market bottoms out at 120, for example. I'm just making up numbers here. Market bottoms at 120, climbs back up to, I don't know, 350,000 or 500,000 or whatever it is on the next price climb. Um, over the next couple of years. And they were one of the people that lost money because they bought at 170 and they sold at 130. And it dropped at 180 and it bottomed at 120 and they threw up their Bitcoin because they couldn't handle it. And they couldn't handle it because they were late to getting on the Bitcoin train. They bought in a parabolic rise. They ended up with a high cost basis and their stomach could not handle the price correction off of that cost basis. Again, it's a lot less of a problem if you bought Bitcoin at 50,000, 60,000, 70,000. Again, I have Bitcoin that I bought for as recently as a week or two back for 109,000, and I think I bought some at 111,000. But again, I don't care. My cost basis is down in the low 30,000s. So we're never going to see the low 30,000s ever again in human history. So, part of the reason I can handle anything is my cost basis is low enough, even though I have some Bitcoin that I bought at 109,000 and 111,000, it's a small percentage of the total Bitcoin I bought. And so the total Bitcoin I bought, including the average, again, Bitcoin at 109 and 111, the average Bitcoin I bought is in the low 30,000s. And that's because I bought Bitcoin as cheap as 6,400. I bought, a decent amount of Bitcoin around $9,000 to $10,000 per coin. And then I bought even more Bitcoin at 20,000, 30,000, 40,000, 50,000. Enough Bitcoin that the average ends up being in the low 30,000s, which means since I have 100% of my liquid net worth in Bitcoin, and since my cost basis is in the low 30,000s, it means I've tripled my entire liquid net worth. Now, that does not include my stock in Prospera, which is that's not liquid assets. So I don't count that in the equation. But just for liquid assets, which is stocks, bonds, cash, anything that you can buy and sell, within a relatively short period of time, for all of those assets, which are called liquid assets, I've more than tripled my liquid net worth. 100% my liquid net worth. Again, because I've got a cost basis in the low 30,000s, even though I'm always buying Bitcoin at all prices. I'll be buying the tops forever. No matter what the price of Bitcoin is, when my paycheck hits every 2 weeks, I buy Bitcoin. It is completely irrelevant what the price is. So the higher it goes, I will be one of the people that are buying in a parabolic rise. But I'm not going to be buying with like huge chunks of my net worth because I already have 100% in Bitcoin. So the only money I'm going to have to buy Bitcoin in a parabolic rise is new money that shows up, for refunds I get from taxes or investments or something like that. New money that shows up, which I will buy Bitcoin with, or my paycheck every 2 weeks. But regardless, as a total amount of all the Bitcoin I've ever bought, that's a relatively small percent, which means my cost basis will creep up over time from the low 30,000s. As I buy Bitcoin up at, 109, 111,000, it will slowly pull that cost basis. It's still going to be so far, my cost basis is still going to be so far below the current price of Bitcoin that it makes it easy to handle absolutely anything. Now, if somebody came to me and said, okay, at 106,000 a coin, Joel, I've never bought any Bitcoin before, and I'm planning on going all in, I would tell them you probably can't handle that. You probably cannot handle a $106,000 cost basis with all of your liquid net worth. You can over time, but you need to get comfortable with Bitcoin. You need to understand Bitcoin. You need to experience, just this year we had a 30% price drop and a 33% price drop. So we ran up to 109 and dropped into what it was like a 30%, but then we ran up to like 112. I forget. Anyway, regardless, I think just this year we've had a price correction of 30% and another price correction for like 33%. I think the biggest was 33%. I know since November, let me put it this way. Since early November, we've had one price correction of 30% and another price correction of 33%. So I feel a lot better if people have lived through that if they're investing in Bitcoin now because they know what that's like. They know that they're not going to throw up their Bitcoin on a 33% price correction. Now, that doesn't mean they're not going to throw up their Bitcoin on 40% or 50% price correction, even though I don't think that's coming. If that does come, I think it will be after a huge rise. I can see, if we go up to 220,000, yeah, I can absolutely see a 50% price correction down to 110. So if you run up to 220 and crash to 110, well, that's still higher than today's price. And we'll probably only be at 110 like a matter of days or a matter of weeks. It will slowly start climbing again, just like it did after the big crash in 2022 caused by FTX and Celsius and Voyager and Three Arrows Capital, a bunch of stupid people doing a bunch of stupid stuff. That dragged the price of Bitcoin down because a bunch of people threw up their Bitcoin because of bad, Ponzi schemes and stupid business practices and vast amounts of borrowed money and all that. So the line is the same. Buy Bitcoin with money that you can stomach the ups and downs. Make sure you understand. You need to understand enough about Bitcoin and how it works and how it's used as money and all of that. You need to understand enough of it that you're not going to freak out when the price drops. So for me, when the price drops, I'm like, oh, no big deal. It's just like the market's not quite ready to adopt Bitcoin 106,000 a coin yet. It's fine. It will be. It's just a matter of time. At some point, the market will be adopting Bitcoin at $1 million per coin. I'm absolutely certain of that. It's just a matter of time. If the price gets a little bit ahead of itself for a little while and it's not quite ready for 106,000 and it pulls back before, again, I'm saying a less than 30% chance, but let's say that less than 30% of chance happens and we get a price correction off of 112,000, which is the most recent, down into the, I don't know, 80,000s or whatever. I'm like, that's fine. Right, sitting here at $106,000 a Bitcoin, the market wasn't quite ready with the adoption of Bitcoin to sustain a price of 106. So we dropped back into the 90s or 80s a little while. I don't care. It's temporary. Pretty soon we'll be above 106 again, and then we'll be in the 110s and 120s and 130s. It's just a matter of time until the market adoption can sustain the price of Bitcoin. And so I can handle those price drops. I understand Bitcoin. I understand the technology. I can handle it. I just want to make sure you can, because the only way you lose money on Bitcoin is by selling it for less than you paid for it. And the way that happens mostly with people is they get over their skis. They end up with a bigger allocation than their stomach can handle or than their finances can handle. And they end up being either forced to liquidate Bitcoin at the price below what they paid for it because their personal finances could not handle the volatility and they were forced to get that liquidity, but for something they needed to repair a house or a car or send a kid to college or whatever it is. Well, usually it's unforeseen things. If you're sending a kid to college, that's very predictable. If it's something unforeseen, you're stuck liquidating Bitcoin for less than you paid for it if you have a relatively high cost basis. Or because they just can't handle it. People just see they buy it 106,000, they see it drop and they're like 96 and they're holding on, they can barely handle it. It drops to 86 and they're like, I just can't take it anymore. Bitcoin's not for me. Bought it at 106, I can't take it. It's down at 86, I think it's going to zero, and they sell. Which of course, as soon as they sell, the price turns right back around and marches back up. And you lose money in Bitcoin. And it happens every cycle because People can't handle it. So the easiest way to handle Bitcoin is to adjust your position size. That means own an amount of Bitcoin that you can handle price corrections. You can handle a 30%, 40%, even a 50% price correction. If, I'm not saying it's going to happen for a long time. I'm saying we can go through price corrections. They do happen. I think it's less than 30% chance we get a big price correction before we get a big parabolic rise. Parabolic means it's like just goes crazy. I think there's a greater than 70% chance we get the huge price rise before we get a major price correction. You need to be able to handle it either way. We can't predict the future. We don't know if Bitcoin goes up before it goes down, before it goes up, or if it goes up before, or if it goes down before it goes up, and then more. All we know is that in the end, it ends up being the best investment you could possibly be in. But we don't know the exact timing of that, and we don't know if it goes down before it goes up, or if it goes up before it goes down and then back up again. We don't know. And so you just make sure you can handle anything, and that the amount of Bitcoin you own is not going to get forced to throw up your Bitcoin because your stomach can't handle it or because your finances can't handle it. Make sure your stomach can handle it and your finances can handle it, and you'll be fine either way. And it's just a waiting game. Because in the future, Bitcoin will be worth way more than $106,000 per coin. In the near term, greater than 70% chance I think we get a big run. Less than 30% chance we get a major price correction. But I don't know. You don't know. I don't know. Nobody knows. It's completely unpredictable. Same with Amazon, Apple, Tesla, Google, Microsoft, Nvidia, the Magnificent Seven stock, the seven highest performing stocks in recent history, which are called the Magnificent Seven. If you were in any one of those stocks, you'd be experiencing the same thing. And nobody knows if you can, nobody knows if any of those stocks are going to go up before they go down or down before they go up. If it's a great company that continues to execute well, they will eventually be worth more than they are today. But that doesn't mean there's not going to be a big price correction between now and then. And you just got to be able to handle that. So, okay, that's all I got. Y'all have a great day. Thank you, everyone. Appreciate it. Bye.